Fitch believes contractor sales volume in 2021 will be largely flat compared to 2020, assuming the COVID-19 pandemic continues to be controlled in the country. Housing demand will be driven by regions with better economic fundamentals, and we believe areas with worsening economic conditions may see decreasing demand. Price pressure is likely to continue in those areas. The Chinese government is likely to remain focused on limiting housing speculation and runaway prices, but government policies are unlikely to be too restrictive. We believe price caps and buyers restrictions will continue to be the most stringent in higher tier cities. Slowing sales growth does not necessarily mean that homebuilders' leverage will increase as the result. This is because they have significant flexibility over land acquisition and construction spending, which are the largest cash outflow items, typically accounting for 60 to 80% of sales proceeds. As such, if sales growth slows, homebuilders can also slow down land acquisitions and construction spending, resulting in a stable leverage ratio. In addition, the Chinese government has introduced policies to limit leverage increase for developers, including the Three Red Lines window guidance. As the result, highly leveraged developers are becoming more prudent in land acquisitions and other investments, and they are also focusing more on generating consistent sales and repaying debt with internal cash. Liquidity and refinancing risks remain the key risk for China homebuilders in 2021. In assessing refinancing risks, Fitch focuses more on capital market debt and trust loans, as opposed to development loans, which are secured to projects and are more likely to be repaid during pre-sales. Fitch believes that liquidity and refinancing risks are highest for small, low-churn homebuilders with concentrated land banks and funding channels. Larger homebuilders have diversified funding channels, but tightened funding regulations such as reduced quotas for onshore bond issuance mean that these homebuilders will need to rely increasingly on internal cash to partially repay capital market debt.